Hi, this is Mark with my analysis for the week commencing the 16th of July. Now, we saw last week that US inflation has dropped more than expected, and we saw the overreaction that we've had, and I do think it's an overreaction. I'm going to have a look at that in a moment. The Canadians raised their rates as expected, and pound GDP came out slightly better than expected, so that was positive for the pound. Then this week, for the week ahead, we talk about tiptoeing around the news. And what do we mean by that? What we mean is that if there's major news coming up, don't take trades just before the news announcement, because often price will go crazy. So one of the ones that stands out for me straight away is the Canadian CPI. So we know core price inflation is the biggie. So don't be placing trades on the CAD before or around the news event. And if it comes out and goes crazy, wait for it to settle down. The only exception to that rule is if I place a forward order and I am waiting for price to come to my area, and I have covered that before, but I will show you that again in the charts today. So Canadian dollar, got to be careful around that, and particularly with the CAD, the USD CAD, because you've got core resale sales at the same time. So you don't want to be opening any USD CAD trades anywhere near that for a few hours before, and probably for an hour or more afterwards till things calm down. Then on Wednesday, it's the same scenario for the New Zealand dollar. Overnight is CPI, and then the pound CPI year on year. At the moment, inflation in the UK was much worse than expected. Last month, I think they were expecting 8.2 and it came at 8.7. It had gone up. And then you've got employment change. The Aussies have already told us that the RBA that they're focusing on employment. So that's what we mean by tiptoeing around the news. So for the week ahead, keep your eye on news reports, and particularly I like this guy, Mark to Market, Mark Chandler. He's talking here after the dramatic week, things started to calm down, and I explained that to you in a video on Friday, what I thought was probably going to happen with the dollar index, and is what did happen. And it ain't rocket science again, it's all about probability. So have a read of this from Mark. He's explaining what's gone on and why, and there's another article in here where he was talking about on the day or the day after what had happened and what he thought fundamentally was going to happen next. So if you're not sure about the post on Friday, here it is. I was talking about don't try to be picking tops and bottoms because it's a mug's game, and we'll have a look now at the charts. So this is that dollar index, and what I said to you on Friday is that once it made the break and the drop, where was it most probable that it was going to run out of steam was the 200 EMA. And that was exactly what happened on Friday. So I made the video, I think I made the video on Thursday afternoon. That's exactly what it did. It stopped to the pip at the 200 EMA. Because technical analysts around the world and computer software, etc., is all aware that we have to try to find somewhere where probability is going to kick in to help us. So that was the thing for the dollar index. Now, one thing to notice as well, there is MACD divergence on the weekly charts for lots of the majors. If you're not familiar with MACD, and this is not the best example, but if price is making new lows and yet MACD is equal or is higher up than that, then that is a clue that price is probably going to reverse or at the very least react, which is what we saw. So look for clues all the time as to what is likely to happen. This is oil. I showed you we were being trapped in a range and we looked as though it was going to break out of the range. But what I also explained on the Thursday-Friday video was with trend line breaks, you wait for the candle to close. And I actually said it in the video because often price will at the last minute reject and go back inside, which is exactly what it's done with oil. Now, gold, I showed you how I had previously bought gold at 18.20 before the prior move. I made a video last week, I think it was 19.20 this time I bought gold. So we're up at 19.60 now. If gold drops further, I would like it to drop more because I want to buy more. I do think that as the year moves on that gold is going to go on a run, and I expect stocks to go the other way. This is silver. Now silver has broken and closed just through a trend line I've had in place. I think, well, silver previously was at $50 an ounce. That the chance for this to go up another 100% from here is better percentage wise than the gold risk. And again, you have MACD divergence on gold for the last move. So this is a better example for MACD. Price here was clearly making higher highs and higher lows. and therefore the pattern was steeply up. At the same time, MACD was lower and was going down. So that was a clue, and that's all it is. It's a clue that price was probably going to react. When you throw into the mix that it was then coming up to the recent all-time high and a double top, which became a triple top, it added to the probability that it was at the very least going to struggle here. And now it's going to need to build up some energy to break through, or an extraordinary event. Same for silver. We had MACD divergence going on here as well. And this is silver on a daily, and it's just sat at the moment. Again, probability and support and resistance. Bitcoin, I showed you, was in a range, and it's more noticeable. Again, we've got MACD divergence on Bitcoin, and it's more noticeable here. We've had the last 3 weeks, it's been trapped in this range. I don't trade Bitcoin, I buy it and hold. I did buy some the other week at the top of Mont Blanc just for my grandkids as an anecdote to say, hey, I bought some Bitcoin almost at the top of the world in Europe. But in general, I am looking for bigger pullbacks for Bitcoin. Some of the big boys, including BlackRock now coming in, will legitimize it more. SEC can't go after them because there's no central body. I do think with the CBDC coming in that longer term Bitcoin will kick back in, and lots of people with lots of money want to stay away from a CBDC to some extent, away from government control. So it kind of adds to the mix. And talking of adding to the mix, if you put in a trend line in here as well, you have lots of things going on here to suggest that Bitcoin would struggle at 27 and certainly anywhere down here at 25. Not financial advice, and I do not trade it. It is too silly crazy. Ethereum, again, MACD divergence on that one. So on to FX, MACD divergence on the Swissy. What I was saying the other day is you don't try catch tops and bottoms here, because anybody who'd started thinking, oh, it's going to bottom here, it's going to bottom here, it's going to bottom here, it will have just seen price rip through it. The clue was that dollar index I showed you with the 200 EMA, because the dollar Swissy is part of the dollar index. Now, for the week ahead, this is very difficult. Well, for me, it's impossible to trade on longer time frames. I need multiple reasons for the stop, and this is out in the middle of nowhere. And I had to go down to a daily, so let's zoom in a bit with this one. I had to go down to a daily to even find an EMA to support the theory. But if you go back up through the longer time frames and you go to the 4 hour, it's miles away from anything, guys. I just do not have any single reason for a stop, and therefore I will not trade it. Euro USD. Now the Euro USD on a weekly has broken I think it's the monthly 55 EMA. It is a major area of previous support and resistance, and the 200 EMA. I had an order down here that if it tumbles next week, I would still take this as an A grade. 107.60 with a stop below the 55. That is still the A grade for me. But on a daily, this is the area to watch. It is a significant break, and therefore the way for me to play this would really be go down to a 4 hour. I would want price to come in and consolidate like this in this area, either here or here. And on a 4 hour, you have more reasons for the stop down here, and you could put your stop below here, 40, 80 pip, possible 180 pip. So it's one to watch on smaller time frames. Now the pound makes no sense to me, does this? Yes, the dollar has tanked because the Fed will probably only raise rates one more time. If they don't raise them in July, it could be that the dollar tanks even further. So the thinking is because the interest rate is not going to get any higher, then there's better value elsewhere. But the British pound, the interest rate for the pound is 5% and expected to go up. The USA is 5.25, expected to go to 5.5. So yes, it would be better to have your money in the UK, but inflation in the US is now 3%, and in the UK it's 8%. So this to me is an overreaction, and it's quite logical and quite probable we're going to see a pullback. Again, you've got MACD divergence going on here. Now, it's been going on for months, so it's not a reliable indicator in its own right. It's just a clue again. When I fib this in here for the pound, the first area to watch is 129.30 for me. I would be happier to place an order at 128.100. and then go down to the 4-hour to substantiate the stop. We've also got some MACD divergence on the daily on this one. So the pound, more than the euro even, looks as though it's probably going to pull back. Euro pound, I'm going to put an order in yet again. I had 2 or 3 good trades out of this. I'm going to put the order in at 86.25, stop above the 55 and the 200. Clearer here on the daily. So you'll be looking in here, place your order, and I say that your stop above all the rest. Had a loss on the New Zealand CAD last week. I know a lot of you did. It was in a good position. It was a good place, but the chaos from the fallout from the dollar situation, I shorted here and got taken out. Now I don't know, and if you don't know, walk away, leave it alone. First area to think about potential short would be down here. I prefer actually the New Zealand dollar itself now. This is a significant break of a weekly trend line by the New Zealand dollar, and it's also a break of the weekly 55 EMA. So it looks as though it wants to go to the 200 mean reversion. So here I would be looking to long this pair. I might split it, so I'll put half the order here and half the order here, but that appeals to me more than that Aussie CAD. Similarly, the Aussie dollar. Now the Aussie dollar on a weekly, it's not so clear, but look at this on the daily. Where did it stop the other day? On a line I've had in place for months, major previous support and resistance, and MACD was a clue it was probably going to run out of steam. Now, the issue for me here is to start to long this. I'm going to need a 60 pip stop for a 100 pip gain. The New Zealand dollar looks a better bet to me. The other option is you wait for it to get up here and think about a short later in the week. Yens have gone. There's been a lot going on with the yens. It came back down, went straight through 78.6 from the 55. Again, it's sat on an area of support and resistance I've had in here for months, and that's exactly where it finished last week. So focus on majoring on support and resistance in all its forms. Now the CAD, I showed you the CAD. There is the big CAD news this week. So the only exceptions to me for a news announcement are this. If the CAD stays where it is now or reasonably in this area, I would still place an order just above 130. 130, I've shown you before, is major previous support and resistance going back to 2004. So everybody and his dog is aware of the fact that this is a huge, huge area. So if it was to spike lower, where would it probably run out of steam? Would be the final line in the sand would be down at 130. In the meantime, if it stays where it is in the middle, that's 100 pips away. The average is 70. So I'm not going to place a forward order here. If it comes back down here, then I might place the forward order because that would be 2-3 days range away. If it gets up here, I might place an order down here at the 200 EMA at 130.80. It's a bit more advanced is this, but it all depends on the starting position of where the USD CAD is before that news. But in general, if it's anywhere near here, anywhere near there, I would not touch it. Aussie yen, one of the few yens that I'm kind of interested in because you've got 50% fib, 55 EMA, 200 EMA, 55 crossing, higher highs, pullback, 200 pointing up. That one I quite like the look of. So I have the order at, well, now I need to adjust this. So I'll be at 92.10 and the stop just below the 200 EMA. And pound Aussie, I have the order at 88.60 now with a stop below the trend line and a 61.8 fib. Ashley will go through with you on Tuesday. He's going to join me for the live training session. He's better than me on some of these wild, crazy cross pairs. Also, it helps because he's around during the day to be able to manage them. So we'll have a look at that as well. So if you'd like to join us for the live session, it's usually quiet this time of year. So if you've got any questions, put the ticket in before the session if it's a complicated question so I can prepare for it. If not, we'll have a Q&A session at the end. Okay, have a great week. Catch you later.